Welcome back, everybody. CrowdStrike posting impressive quarterly numbers last night, beating on both lines, and that stock is actually up this morning. It's also well above its IPO price from early June. But if you've been looking at it over that course of time, it has pulled back to earth a little bit just over the last 3 months, watching what's been happening with that. This morning, though, CrowdStrike indicated up by about 6%. George Kurtz is the CEO and the co-founder of CrowdStrike. And George, thanks for being with us this morning.
Thank you for having me.
All right. The street liked what it heard. The loss was narrower than had been expected. Probably importantly, the revenue was above expectations, too. I think it came in at $125 million versus the $118 million that the street had been anticipating. So what are you seeing out there? What do you think is happening in terms of new customers you might be able to pull in?
Well, we were extremely proud with the quarter that we posted, over $500 million in annual recurring revenue. And I think it's a testament to the cloud-based technology that we've built to stop breaches. And that's what customers are looking for. They're looking for outcomes to help them stop these very sophisticated attacks. And we've delivered it in a cloud platform, which hasn't been done before in the security space, really creating the security cloud. And I think that's one of the reasons why we've seen such rapid growth, because we're solving a really hard problem at scale.
You know, the stock has had some good success since the IPO. But if you're watching your stock or any of the stocks in this arena over the last several months, there's been a bit of a pullback because the view of the street has been, OK, you really need cybersecurity companies. But how do you distinguish between the cybersecurity companies? How do you make sure that they maintain their edge and that they are always staying ahead of where the cyber criminals are? What's your answer to that?
Well, a big part of what we do is we crowdsource this technical data that comes off of these endpoints or workloads, these computers. And we use AI to be able to predict whether something is malicious or not. But more importantly, we've created a platform that spans beyond just security into IT hygiene, so the health of the system. And I think given the modules that we've created, and part of our success is how we sell these modules across an enterprise, we've become very strategic. And I look at us as a company that's akin to a Salesforce or a Workday or ServiceNow in creating really a cloud platform, which we call the security cloud. So we think of ourselves as, beyond just a traditional endpoint security company, but fundamentally a cloud pillar in the future.
George, Jason Trenner here. I was wondering what you think about the lockup that's about to expire in a couple of days and how that's going to impact the stock. Do you think that's had something to do with some of the recent weakness over the last couple of months in the stock?
Well, as most companies have a 6-month lockup, which is traditional, ours is coming up next week. And obviously, there's traders that trade around that. And, I can't predict what's going to happen. But I think what's most important is continuing to deliver value for our customers and continuing to focus on revenue growth. And one of the bright spots that we talked about in the last earnings call was really a free cash flow, $7 million, which was way ahead of schedule. So some great data points for us. And, we continue to be heads down providing value for customers.
Hey, George, very broadly, I think your lockup expiration expires. Is it this coming Monday?
Yes.
What does that mean? Will you be selling shares?
Well, as you might expect, I'm part of the management team, and we have what's called a 10b5-1 program, which is part of something that the SEC has, which basically programmatically allows you to sell. So there's a very small portion of my holdings that's part of that program that could programmatically sell, but it's really more for diversification. It's not a reflection of my view of the company. I'm extremely bullish on the outlook of the company and excited in the numbers that we just posted.
CEOs love that provision, don't they, George? It's like they all have the same answer every time. Yeah, it's like a default. It's beautiful. Whoever came up with that, I don't know who invented it, but this goes all the way back to when it mattered. If people were, remember, Jason? It's like I don't really. You never really have to say anything. It's like, oh no, it's really just sort of one of those. But it's just a small percentage of what you own, and you're not going to sell any of the other stuff in this case.
Well, it's a small percentage, yeah. I mean, if it happens to sell, it sells. But again, that's going to be out of my hands.
But you don't have plans to exit any of the large. I think that would be more.
No, absolutely not. Okay, no, this is a very small portion, just for diversification. I've been out this 8 years, so again, we're focused really on building the value for the company, and that's where my head's at.
I called you Kurtz. I love the name Kurtz. Don't you like Kurtz from Brando? I mean, don't you?
Hey, everybody called me that.
They do, right?
Kurtz. Yeah, they do.
Yeah. Kurt, I knew that. See, I'm not crazy.
No, you're not.
He was.
It was.
He was.
You're not crazy on this.